manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, sorry about yesterday. Internet didn't come up for an hour and a half after broadcast time. So anyway, we're here today. We're going to talk about how the market is absolutely defying reality. Let's get into tonight's video. Well, folks, welcome. I guess better late than never. Had some issues with the system, but we're here finally. Like I said, yesterday, internet was down all day, so it was a nasty day, and I got lots of text and tweets from Sparklight, who's my provider, acting like they cared. They didn't care at all. Anyway. Soon fiber is coming into this place, so I will be wired up with 10 gigs. So anyway, folks, thanks again for being patient. Still tweaking in the new studio. That's what delayed me today. So getting it tuned in. The good thing about a Mac, once you get it locked down, it stays pretty solid. So it's just sort of like a hostage negotiation with everything you do on it. Once you get it done, it's done. All right, so I am like really confused here, folks. I have to tell you, I've been around these markets a long time, and you know, I tried to discuss this. I really needed to do it in a video, so I'll do this today. But really what I'm seeing here is the financial markets and our media. I don't know if the public, the investment community has gotten completely brainwashed or whatever, but I talked about this before. It's called anchoring. So the media on all levels anchored everybody to $120 crude oil. Crude oil was at 120, went to 120. It was there for 5 seconds, and it completely dropped all the way to 105. Within 30 minutes, it was 95, and it hung around 100 for a while. It goes all the way into the 70s and finishes at 85. Oil was never priced at 120. Now, 85 was not good, but they made it sound good. So look at how the equity markets rallied for 2 days, like just kept going up like there was a bid. Everything's okay. Right now, crude's at $93. The IEA is dumping all the crude they have on the street. Trump just let 176 million barrels fly, and the market's got a bid in it. And I researched a little bit, but the IEA and their history is crude oil goes up when they start doing releases. What it's telling, I think that what that's telling the oil folks, the people that know, they're just like in every market, the oil people are really, really good at what they do. I ran an oil hedge desk back in 1990. I oversaw it. I had there was a group of guys that were the team that was doing the trading, and you know, I've had the opportunity to be on the metal side of hedging, primarily gold, and then on crude oil, we had some big major league customers. One of the guys on the team, his dad was a senior exec at Standard Oil once upon a time, so he was really hooked up. And all I can tell you is the crude guys, let me just bring up a price here because I want a current price. So last print on crude, 93.77. That's pretty close to the high of the session. That's after all these releases. And what the crude guys know is that the government's, everybody's panicking about the oil price. Meanwhile, at least we're seeing finally the reality come in a little bit with the futures. The E-mini, S&P E-minis are down 56 sandals right now. Starting to see it fall back in toward the lows that we came in on Monday. I don't see how anybody could look at these prices and think, let's buy stocks here. You know, we saw CPI, and as I said this in last night's Substack, there was the CPI and the PPI are not going to reflect any of this. This is next month. So what the crude guys know, you know, everybody knows this is going to be bigger numbers and this is going to be disruptive. What I tried to say in Substack last night, and I read it after today, or after I write it, I read it like 20 times last night. But as I reread it, you know, I was attempting to tell everybody that, you know, there's no reality in these markets right now. 93. If we wind back the clock to 2 weeks ago, 3 weeks ago, $65 oil. If we were sitting here and contemplating, looking at the markets as all of us have our opinions on the markets, and we looked and go, if crude goes to 93, market's going to be down a lot, right? You're going to think that's not going to calculate into something positive. And meanwhile, you know, the markets did pretty good for a day and a half. So finally, reality starting to set in. I do think, and I'll go through the analysis here in a minute, that there's pretty solid support down at the 200-day moving average and the 40-week moving average. I think we could dip below it, but those numbers have to be retested. That next test, this is, you know, we're looking at Wednesday, so when we come in the next couple of days, if we hold those numbers, we'll see what the action is, maybe make a determination. But I'm going to show you in a minute, the database is at 23%. It's about to go into full liquidation mode on a short-term basis. So as I tried to keep steady, especially after yesterday was one of the more frustrating days I've had, just with the internet literally down the entire session. I didn't have a live quote here. I ran my computer off a hotspot for a while, and I'm blowing up the data on my phone trying to run, you know, 6 monitors off a phone. It's pretty funny. It actually worked, but it was reasonably responsive. But the point of all this is that we're it's amazing to me. You know, like I said, maybe I've been talking about something that I've been seeing, and actually starting back at the pandemic and then coming into today, is there's been a change of guards, and I've been talking about this. I was part of that once upon a time. I was in my 30s when my first serious job where I was running a division and running as a head financial analyst. We had like 5,000 reps, and I was 38 years old, so I get it. And that the group that's running everything now is at, you know, we're going to call it 36 to 34, 36 to 50 group, mostly millennials, a little crossover on the top side. But the bottom line is the markets have developed a new character, and I've been talking about this, and I'm not ripping on the millennials. It's just a change of guards. Like I said, I was there. I remember looking around, and the people that we were the largest. I worked at the largest commodity trading firm on the planet. The CFO was 43 years old. The COO was 40. The whole top management, nobody was over 44, and I was 38, and so it was a really cool feeling. You know, we had was a major player on the planet, and it was just a bunch of us young guys. You feel pretty good. 38 to 45 is one of the sweet spots in life, and so it was a fun time. So what we're seeing, though, is the reaction, some of the interpretation. I had a tweet go viral about a month ago, got 5 million views on it, and all it was, and and some of this I'm going to start to bring into the character of my entire tech stack that I'm developing a whole new, I guess, view of what I'm doing and what I'm trying to do with in my, we'll call it my phase, last phase of my career is how I look at it. So I'm going to do this for a few years and kind of build some things, and hopefully I can build it up. I want some things that live beyond me, and my hope is that I'll be able to do that. But the reality is there is the momentum shifts and the reactionary things that we see in the market. And I think that psychology, I hope that maturity comes along with some of the reactions as well, because it seems very odd to me the way things are interpreted today. Maybe it's because I'm old, but I don't think so. Things will realign when they get out of balance, and I think we're very out of balance right now. I'm looking at the S&P chart, I'll show you in a minute, and we're definitely trying to set up even a right shoulder here as we retrace back down towards Monday's lows, or we're going to go through. And my feeling is there's some vulnerability here, but we'll break this down as we go through tonight. So, but the whole point of what I'm seeing right now is there's no reality. The crude oil, the energy sector has been completely disrupted in a big way. And it's not going to get fixed in 3 weeks or 6 weeks or maybe 6 months. There's going to be there's something that I've referred to a lot of times, usually since I'm primarily financial, putting my commodity hat back on. When you disrupt the market, you get these dislocations in how things are being distributed, how we saw that in the pandemic, right? And just the entire supply chain. It took years to fix that. That was full out, everything broken. But we're almost there right now in the energy sector, and it's not just oil. I mean, it's nat gas, it's propane, it's every sector. Jet fuel. I would suspect we're going to see a lot of increases in fares, and everything's going. This is a big deal, and it's not going to get fixed overnight. They're not going to stop shooting bullets today and blowing up things, and it's just going to get better in a couple of weeks. It's not. This thing is. A lot of things are going to have to be rebuilt, not just refineries and things like that got built up, but just the flow of what's going to feel safe going forward after this. Safe meaning, where are the shipping channels, and where are those things that need to continue to be functioning at a high level and be dependable. So who knows what that means? It may be building more pipelines. Who knows? There's always going to be vulnerability on the world, and when human beings don't like each other or decide to go to war and destroy everything they have. So we've got a ways to go on this whole situation. So this changes potential forecasts for economics. The so-called all the CapEx that I've been talking about. I'm kind of calibrating everything at the moment. So I don't know what it means. I'm just sharing it with you, because a lot of times when I share these thoughts, they kind of manifest and grow and get clearer. So that's why I like to talk and have this opening comments that I do every night. It's the same thing with the newsletter, with the Kindle Report Opinion, is I put that stuff out there, and it just kind of, I can focus on it and try to see what's real, what's not. And some people go, "Oh, he was wrong. He said this." That's okay. That's how you migrate through situations. You have to be wrong so you can figure out where your mistakes are and then find the right path. That's the way it works. There's all these little trolls out there, I call them, that like to go, "Oh, he was wrong," and this, that's fine. I'm well beyond that. So so anyway, I'm kind of done here from that standpoint. But what I am going to focus on tonight is we'll go through the database because it's at a critical threshold. Things are changing. I talked to you about in the last several days on the channel and on the Substack that there's this potential regime change. And by that, I've been talking about this forward-looking June, July. It's still kind of hanging on at the moment. But on Friday, we'll find out a lot when we get the intermediate run to see if we start to penetrate. And we went from, 67, 68, all the way down to 54% bullish. If we penetrate through 48, then we're going to be challenging a new thesis of, how this year is going to look. So that's what you're going to be at least hearing from me as we go forward here. And I don't have any answers yet. I'm always dependent on the data, and the data is starting to show weakness. And in the next, probably by Friday, there's a good chance that we'll see this short-term database break through 22, and then that starts to put more pressure on the intermediate models, and it's going to get interesting. It's not at all like if 2 months ago, I guess if you'd have asked me what it was going to look like, I wouldn't think it was like this. But I also had said that the only thing that's going to change what that outlook was looking like 2 months ago is if there were some major event that we weren't unaware of. Now, we always knew this was a possibility with the Iran situation, but we didn't think, maybe we didn't think it happened when it happened. I don't think reality is set in yet. I don't think, Trump is Trump. He came in the other day just to rally this market. He knew he could save the market by saying the war's complete. What the hell does that mean? I talked about that in Substack last night. What is it complete? What's a complete war? What does that mean? And it doesn't mean anything. It's really was a way for everyone to think, oh, it's over. They're going to quit in a few days and everything's done so we can go back to normal business. And what I'm telling you is this has changed everything in the oil patch and in the Middle East. All of a sudden we were looking like we were heading towards some kind of, peaceful time in the Middle East. But that's not going to be the case at all now. And I would, there's something in my mind I would love to say, but I'm not going to. But I would tell you that there are an entity on this planet that is a big troublemaker, and they continue to be the center of all problems on this planet. Now, just say that. You can read between the lines, maybe. All right, so let's go ahead. We'll set up here. I'm just getting a couple things ready on the other screen, and we'll go through the database because that's going to be the next phase that I need to talk to you about, and then from there we'll go through the normal markets. I think it's kind of interesting because I did tell you last night, the crude oil's not done yet, and it's already starting to see some pretty good up pressure. So let's go ahead and see if we get it set up. I think I've got all my buttons working here. So let's go over here to the database, and all right. So here we are. We had not a lot of selling because we don't own very much. We own 3,282 symbols in the database right now. There's 10,899 symbols, no position, neutral, and if we didn't build in the short logic in this platform, I wish we had. We decided because the customers that we were serving with this product, and even with Portfolio Expert, were pretty much long only or cash. Most investment advisors, the people that 401ks and all that, they don't go short. So we built a long only model, and we balanced our our risk by using cash, which is very effective. Cash doesn't have any, it's a riskless asset. And so we just balance all of our beta through cash, okay? But so we've got a lot of symbols that don't have positions right now. So we had last night 500, roughly I'm rounding off, 500 sells and 120 buys. So we had negative ratios on everything. We're down to 23-14, 22% is the magic number. It clicks into what we call full liquidation mode, which typically the percentages will go down to about 18 to 12%. That's kind of where it bottoms out. I never watched, I don't have a number that was the lowest number in the short-term models, but on the long-term models it was 8%, and that was during the 2008 sell-off. So during the GFC. So the realities is that we're at the verge of triggering that. So I'm going to go back over here, just bring up the intermediate models real quick. So intermediate are 54.26. I mentioned that a minute ago. 48 to 42. 48 is the next trigger point, which tells us that we'll probably go into 42%. And I've seen where those stay in that range for a while. And what that tells you is that the steepness of the decline will not be as big. If it drops below 42, then we can actually change. That's where the regime change. So it's a long story to get to the regime change. Under 42%, we're going to be in a negative, start to flow to a negative regime. It'll be initially at 42 is sort of a flat, non-trendless, but it's the bias is to the downside below 42. So there's going to continue to be attrition. Typically, it'll keep grinding down through these different metrics that have shown over the years that it holds around that, and there's characteristics of each one of these different levels. So it's much different than looking at trend lines on an index and go, oh, here it broke down here, and look at Fibonacci targets. This tells us a lot about recovery time as well. So once you break through these barriers, it can take weeks and months. It usually takes weeks and months for it to recover just to start the next. So it gives us a feel for not just how deep what the trend is doing, but also longevity and potential turnarounds. And it can grind down in that 30 percentile range down to 28. It can hang out there, and those aren't fun markets. Those are, when we get into the next earnings season, you start to see stocks when we're in that kind of configuration act different. It comes out, good earnings don't respond like you expect, and if you get as expected or miss earnings, those stocks get just cratered. So it gets much more aggressive on the sell side when we're in that mode. And this comes from, this database has been around since technically 1996, but in real terms, when we had users, we had over $1 billion running in this box, was 1998, 99 was. And so I've been watching this stuff all these years. It's been my job, and we've run a lot of money through here. So it's been interesting because it's given me a lot of context. And I was telling you, I've got a project where I'm working on some database where we're going to be running some algos and going through looking for patterns and things using some of the LLMs. Probably Claude will be using Claude Code for doing some of this analysis, and we're working on a couple projects right now, so pretty exciting. And so anyway, that's where we are. Data That's what I mean when I'm talking about a regime change, those type of things happening. So it's going to get interesting. This game is not over. It's not going to, like I said, my expectation is it's not going to be they stop shooting bullets and blowing things up and things get better immediately. There's going to be an assessment of the energy sector that has been disruptive. I think there's going to be a lot of different looks at what was thought to be safe and dependable is going to have to be all reevaluated, and I think there's going to be a lot of dislocation and a lot of things to think about after this Iran war thing is over, especially we haven't seen the outcome yet. And I think it was 2 or 3 nights ago at some point in one of my videos, like don't underestimate a desperate regime. They could be hiding something underground, who knows? And I think they are desperate enough, and you've got so much damage being caused to their country right now. I hate this stuff completely, and I don't. The only thing that is right in my mind is if they really were a few weeks away from having nuclear bomb and all this stuff happening. I don't get the world, so I won't go into philosophy on that right now. Maybe someday. And maybe no one cares. It's okay for that too, but from the market's viewpoint, I do believe that things have been disrupted big time. Okay, this is not, there's no easy fix coming out of here. All right, so let's move on. Let's go ahead over here. I don't know why this thing keeps doing this to me. Okay, here's what I was talking about. Let me just focus in on this chart. So here was Monday's big spike. Let's see, I believe that my tool will work so I can draw. I got everything working finally. So this is the bar I'm talking about right here. So while crude was hanging around 85, now it's back around, I think, 92, 93 last we looked. So now we're starting to get this maybe a right shoulder. You can see the red dots are forecasting back toward this 200 here. And I told you that what I thought would happen, and I still believe this is the case. Let me clean this up just a little bit here. What I think is going to be the case is this is kind of your trading wedge right here. So that you got this is daily, a 10-day moving average coming down. I think we stay below that. I'll show you the PPMs and the current angle of attack value, and this is the 200. I think we trade in this range, and somewhere over here toward the end of the month or so, we'll start to see. Well, over here is where we'll see us be able to break out of the range. But even if we do that, let's say we trade here and we decide we're going to go up, you're going to have resistance at all three. So there's layers of these wedges, which usually tells you consolidation. What this would tell me, maybe we get into full liquidation mode on the short-term database, and then an intermediate database is staying over 42, which would equate in my mind that we hold the 200-day moving average. That slope is probably big enough. We're going to go look at the PPMs here in a second. But these are going to be your fan lines. These are going to be your resistance. I call them like supply. So you're looking at, you're going to have lots of sellers along these different angles. And then the PPMs are going to tell you when we'll go through that. But ultimately, what I've drawn on here is probably where we're going to hang out. We dipped a little bit under the 200. These fib targets down here are still live. So we could dip down to those targets. They're not on the screen. I'll talk about them here in a minute. But this looks to me that this is how this is going to set up. We're just going to have these layers. It's going to rally. Looks like it breaks down. It's going to come back down. It doesn't have to come all the way back to the 200 each time. So we'll be talking but along this line here for the next several weeks. But this looks like to me where we're going. So the only question that we're coming in here is with this spike here, we've got support lines all the way down here. So we could come down here and we would get a formation would look like maybe like this. And then this line, maybe we come up to this resistance line. And then you come back down again, and then you come up to here. What you're going to get from an L8 wave viewpoint is an ABC X ABC, like a double zigzag. And that's probably what sets up here. I'm still not on board with predicting that we're plummeting, we're going to go down 20%, 30%. I don't think that's going to happen. And this is all, I guess, predicated on the fact that crude oil starts to come back into maybe 70 and head back to 65. And Trump's right about that. When it's all over, it all sinks back there. But I have questions, and the reason why I set up what I wanted to talk about today, what I've done, is I think there's enough disruption and this dislocation that it's going to cause crude oil to stay higher for longer rather than just come back in and everything's back normal, because it's not. And I don't know what we'll have to come up with one of those El-Iron moments where the new normal, because the old normal is broken. I'm sure of that. It's just, is the new normal that much different? Maybe not, and maybe it's a lot different, and maybe it's a lot better when it's done. Who knows? No one knows this stuff. So we kind of have to watch. We all are watching the same movie. We just happen to view it and have our thoughts and our outcomes change based on how we see the world. And so we'll go from there. Okay. So when we look at, I'm going to go to the weekly for a minute, and I usually do most of the analysis on the S&P, and what I'll do is I'll come back, we'll look at the NASDAQ, and they're very relevant. They have the top end of both indexes look very similar. NASDAQ's got a little heavier weighting on the tech, but they have the same. Both indexes are of the same family. So, but this makes even more sense now, because it felt like, and I mentioned it, I think one day, sometimes it flashes back in my mind that maybe this is, Trump's April of last year when we got that big reversal. It was 11% range in one day last April, when that was very climactic in nature, and this is acting a bit different. And I don't use candles. I don't like candles because I want to see the whole range. I know you guys like the wicks and all the stuff. I know most of the lingo and most of the formations. I worked at Merrill Lynch with Steve Nissen, who really brought. He was writing the book while we were both at Merrill at the time, and he was writing a book on candlesticks. And Steve was the first to tell you he was a good analyst, but he couldn't trade his way out of a wet paper bag. Was not a good trader. Well, I came from a much different world, coming from trading floors and then ending up at accidentally at Merrill Lynch Research and running my own book of business at the same time. So it was the point is that the bar is just, for me, I'm old school. I started with one of these, like a pen, and drawing on paper charts we had a thing called Commodity Perspective, and we had to update, and we get our ruler, and we'd set up, everybody, you could go into a trading room after markets close, everybody's updating their charts every day, and you buy a new book every 2 weeks, you could fill out 2 weeks, you'd have all kinds of notes, there would be stack of these commodity perspectives. I wish I had one. I found some images on Google looking for images of commodity perspective, but there would be, 3-foot high stacks of these things for every 2 weeks. It was fun to go back and read them anyway, flashing back to the old analog days. But my point is, so that's where I came from. Those make more sense to me. I didn't like a lot of the ideology around the whole candlestick thing. Yeah, so I'm a Western world guy, not a Japanese guy. So anyway, but these indicators and what we're seeing here are on a weekly basis are not getting stronger. They are getting weaker. So even though the wedge I just showed you, draw it in, is here on the weekly. It's just the 10-week is the top, like the top of that band. So this is going to be our trading range. I don't think we close below it. The one thing down at the bottom here, I'll move a cursor over here. That 200, the WaveTech 200, ppm 200. That is pretty solid line, and that tells us that this angle of attack is going to be pretty solid. So I don't think we collapse from here. I think we've just, we went on for months in that range that I was talking about. So we've expanded the range or probably changed the stair-stepping range. If we stay here and we don't get much of a move ultimately above that 10-week moving average, then we're going to start to see market deterioration further. I still am optimistic to Q3, Q4 this year, just from the fact that those CapEx investments are real and are coming. And if the war is over, then we'll just be retooling everything that got broken. All right, so let's go on to the NASDAQ. All right, so NASDAQ has a much better profile looking. This is typical, and a lot of that has to do with just the relative beta. It has a much higher beta as an index. See PPM1 down here is looking like it wants to expand, but everything's still coming in, mid-April, something like that. So we've got lots of work to do. We do have a new fib target that came in this week. We had these big lower targets, and I told you that didn't look very realistic from the standpoint of being any of these levels being hit. This is 20,429, but right now we did get a hit. Let me bring this up here. Over on the far side here, you'll see low target 1 is 23,854, 22,901, 22,312, and that's these new red dots right up here. Those are probably potentially more realistic to be hit, and this is a weekly basis. So we are right now, we're at negative ppms on ppm 1 and 2, just tells you angle of attack is down. So these resistance where we traded up to off of Monday's rally went right to the resistance, and we're seeing a rejection. This is a weekly chart we're looking at. So that is there. Let's go to the daily real quick because I just want to get moving on here. We're getting late in the show. I've been talking a lot today. So here's the daily targets. The 200 is not as robust looking as the S&P. Has a much better profile here. Weekly profile on NASDAQ is a bit stronger, but it's kind of one of these confusing. So, but you can see there's some negative draw here, and we've got some fib targets down here. 23. Let me blow them up. They'll be on the far right over. You'll see them over here. 23, 385, 22, 570, 22, 081. So that is a downward target. And most of the time, for those of you that have the indicators, that first fib number is usually where it normally will, in this case, bottom out. Those targets are usually pretty solid. We're not seeing a lot of forecasts of acceleration, but I think there is some risk of that actually happening. Okay, so keep the context of everything I talked about in the S&P, same patterns basically, one a little weaker or stronger depending on what you're looking at, but for the most part, like I said, they're S&P and NASDAQ are cousins. They got a lot of if you look at the top end of the constituent list, you've got a lot of common stocks there, and the Mag 7s are hanging around, all that IT stuff. If you looked at some of the heat maps from today, the NVIDIAs and those guys were the stronger of the group for a while there until we started to fade. So with us down 56 handles right now, looks like they're trying to press them just a little bit here. But, so I think as we come into tomorrow, we're going to get all the typical labor numbers. None of this stuff matters. It's too, you're looking in the rearview mirror. This is last month. Everything changed from the time that the war started. So you're going to have to wait 4 weeks if you want to look at those metrics, and they're not going to meet. All they're going to do is, this is a reflection of what was going on then. So the whole problem with looking at these metrics, over the course of the last 6 months or a year, I've been telling you that, a lot of times just looking back on these metrics, in 2026, we should have metrics that look more forward than backward. We're basing think about what we do every day. We look backwards at what happened last month and make decisions about today. Seems kind of silly. It's always been silly, but it's the way it's always been. And I'm waiting for some valid metrics, maybe the new Fed coming in, some retooling. Scott Bessett's a smart guy, good market guy. Maybe we finally start to get some metrics that we look at what's happening pretty much today. I think we should have real-time economic metrics at this moment. I think it's very feasible that there's plenty of areas in the economy that you could have, even if it was 1 week. But looking back, most of this stuff, not only we looking back, they're adjusting the previous month. So we're trying to compile and make decisions about the adjustments in the 2 months ago and the estimate of what they just told us the numbers were, which are probably none of them are accurate at all. And we're making investment decisions. Like I said, one of the best times that we had, I thought, when we're trading, when I wasn't thinking about those, when the government was shut down. Remember, I kept saying how well the markets work when we just focus on the companies. And even then, we're looking back 3 months and they're changing. It's kind of a joke how we're doing things. I'm hoping with AI and new tech that we're going to be able to get more real-time view of the world and maybe some forward-looking estimates. I mean, I love having the algos. My life has changed and how I see the markets a lot since the algos come in. And I still will, Alexander in Germany, I met with him in Zurich, and we sat in a hotel room I wish he'd reached out to me. I've lost contact with him. But he came up with this concept, and we started working on it. It was we spent 3.5 hours in the Hilton Hotel in Zurich, in the lobby at a desk using the in-house internet, and it was pretty fascinating. He brought a lot of spreadsheets, but the whole concept of being able to look forward is what I'm talking about here, because I know what it's done for me and how I see the world, or how I see my own work now, and there's things to even understand about the machine learning and the quirkiness of some of the forecasts and things like that. So that's why I'm really I had really intense meeting last night. I was up till 7 a.m. Eastern time, working with a guy in India that I work with, and I'm really excited about. Last night's meeting was pretty insane, and we're putting this membership, so I'm going to have all these scripts. So for different market environments, I'm really getting excited about this, because I'm finally going to give you guys something that's usable in your business. You got to have the indicators to do it, but you're going to have the analysis. Those of you that saw that call I made on silver, that was through the algos and through identifying the exhaustion points of parabolic curves. I mean, you're going to have all this stuff. I'm excited, because this is the first time, instead of me sitting here talking and showing you this stuff, you're going to have me by your side. You're going to have Claude, and there's going to be some really cool stuff, because we're going to have a whole section on the Discord that we work out there. I've already met a lot of you guys. I know there's some really smart folks watching this broadcast. So so it's pretty cool. We got good times ahead of us, folks. Just know that. All right, let's move on. We're going to go quick from this point forward. I usually like to keep it to an hour. I'm going to do my best to get there. So I'm not going to go through the Russell tonight, but it's continuing. It's not really unwinding the numbers. Let's see where we are here. I just want to look at some stats real quick. So yeah, so that spread that we once had. So right now, mid-cap up 3.4 on the year, Russell up 2.5%, S&P minus 1%, Dow Jones minus 1.3%, and NASDAQ down 2.3%. So that spread that was expanding, that whole rotation trade has just faded into flattening out. It's still ahead of the game, but all the gains were made earlier in January and February. Now it's just unwinding slowly, but holding together. So, yeah, I see a comment, buy oil. Yeah, every time these guys start dumping oil, that strategic reserve and everything that's going on, they're telling the market they're panicked. Trump's telling you that the war's going on farther, even though he said it was complete. It's not. And him dumping oil into the market is him trying to knock down the edge. The same thing with his comments the other day. Just hope they don't mess this whole thing up after the disruption, that we can get the world to function at some better level. We'll just put it there. All right. So I'm going to be really upset if I had no voice on there. Everything's good. You guys would have been screaming at me. Okay, good. All right. So let's go to gold. I think gold is in a distribution level right now. I think this long pattern on the daily is starting to suggest that maybe we're going to start to see some more downside here. Gold got so far ahead of itself, and as I've talked about, I'll bring up silver for a minute. But gold is just grinding through, and I think this is more of a distribution. We're probably going to stay sideways, but let's take a look at this intermediate. This is almost like a Bollinger Band bubble. It turned into a bubble. It's usually a slightly different shape, but we've now consolidated. Look at the potential downside coming into May. Looks like we might get through the 10-period moving average. I would suspect that we're probably heading back towards, maybe getting back to 49.50, 5,000 is probably going to be a magical mark. But it does look like we've got some potential downside. And even over here, though, it's going to be tough getting through the 10-week, this is a weekly chart I put up here now, getting through that price level. But if we do, there's no big collapses here. I think there's just a large consolidation needed. And when you take and you look at what we've done in gold and zoom out to 30,000 feet, the last couple of years have been pretty eventful. So a consolidation, the red dots, this is weekly charts showing we're just going to consolidate. Let's go ahead and just leave this same chart up here. And I've been talking about this as weekly. We have a number more weeks to go. Let me blow this up. So I always tell you about these volatility bubbles in the market grid. So volatility gets huge. It's now starting to contract, like I told you. We're still looking at probably another month, 6 weeks, 6 more bars, and finally we'll get that more consolidation. The red dots are suggesting still bias to the upside, but I think we're going to see really just that contraction still continue in this pattern. So no big moonshots on gold, on silver. You had that, and this big bar when we traded up to the 121 level, that was the most climactic moment I've seen in a long time. You could be a year and a half before you see any big move again. We may just consolidate and just draw a line around 90, and you'll be oscillating a little above and down, just going sideways. We'll see what sets up. Next 6 weeks is going to tell us a lot, but we're definitely still like the predicted ranges right now. If we look up here, is let me just move this up just a bit. So this is weekly. Let's go to I want to go to the daily. This will give us a little better view for what I want to. So yeah, so you can see we're into this. This is what I was about to say. We're just probably going to fall. This is 90 right here toward the upper end of this range. And then we're looking at 75, probably 70, 90, grinding. If you get excited at 90 and think it's going to break out, it's probably not. And you could always lighten up at 90 and then buy the breakout if you're that kind of trader. I think what we're seeing on the screen with the moving average is just going flat. You're going to oscillate around that range. And that's what the weekly chart's still telling you about the contraction of the big volatility bubble. Okay? So we'll go to Bitcoin and I'll come up and answer a few questions. So you got good questions, please put them up here. Yeah, so Bitcoin, if you recall, I was talking, this was those wedges where I told you we'd get, I remember we were over here, so we had these projections of these moving averages continue down, which they right on course, they never deviated. And I said each time, just like I was showing you a minute ago on the indexes, on the equity indexes, each one of these points, so here was, we were going to go up against there, we got toward the 21, and then we rejected down, and then we get up to 40, we closed over it, we came back down. And I said when we got to the point where we are right now, we would then be able to possibly tell what type of, were we going to enter into a range. And I've been talking about these fib targets. This is 84, but 81 bucks. We got up, here's 75. We printed 74, so that was the 75 print, we'll call it. The next level is 80, I'm going to round it to 81, it's 80,700. And then this next fib target in the level is 84. I think everything tells us that we're going to continue, probably start to get above the moving averages and go around along that line. That 50, I think this is the bar right here. Yeah, 59,930 on this exchange was what the low was. 60,000, call it. That's your key number. You're probably going to continue towards 75 to 81, and then just look for it to come back into these ranges again. This is a daily chart, and the weekly chart confirms that story. And you can see right now the 10, so we have those same wedges. I'm going to draw this in real quick because I want everyone to understand where the resistance points are. There is no moonshot to $100 or 126, 250. I estimated what it would take from here to get to $1 million, and it would take an investment of roughly $26 trillion. The best I could come up with the probabilities to get. So that means you have to find bigger and stronger bagmen that are willing to pay 200,000, 300,000, 500,000, but estimated 22 to 26 trillion dollars to pour in with the to get Bitcoin to a million. And that's just a guesstimate, but every time you double the amount of money that you have to go in, any asset has to accumulate to get to that level. It's not just double the money, it's 10 and 20 times a lot. I wish I remembered the number now. I'm trying to remember the number. The amount of percentage amount of money that had to come in. Oh man, I wish I remembered that number. I probably could find it, but I don't want to do it right now, being live. But it's a lot, folks, and to the point where it's not even believable that could happen. So, but that doesn't mean this is not a tradable asset. I'm not saying it's going to zero. I'm not saying it's worthless, and that's not what I'm saying. I'm saying this asset's going to be a good trading asset. There's enough interest in it. It's not going to die, and it's going to be some good trading here. So enjoy it. You got a $2 trillion asset to trade. Have fun trading it. Everybody that owns it's not going to get wealthy by doing nothing. What a great world that would be, right? So anyway, it's a good tradable asset, and to me, those same fan lines, everything that you see here. Let me draw this up real quick. So here's your fan lines on Bitcoin off a weekly chart, and you get out here, and guess what? You're right under the 200. So it's the same. You'll come up. Let me clear this off. So you're going to rally up here, you come back down, you go to this line, and then you come back down, and you come up here. And meanwhile, you get this consolidation ABCX, ABC, or ABCDE. You get some kind of consolidation pattern down here. And you probably, got to draw the bottom line in, this is the slope of the 200, and this is your trading range for the next 2 quarters. It's going to be that simple. If it breaks down, then that's a whole different story. I don't see that happening. That doesn't mean that can't happen. The forecast looking out is for stable. This is the forecast. Is it going to be right? I don't know, but that's what it looks like. Let me remove this for a second. Those of you that come in all the time, this was my scenario going back on this next breakdown, because you remember the target, the fib target was 58,000. Everybody said it's never going to happen. Well, guess what? It got to 60, got to 59 and change. But we're still working that first wedge. So then there'll be the next wedge and the next one. So, and I believe that the 200, just like with the equities, just like with that, it's amazing all the patterns that are in the markets right now are similar in configuration. And I think we're at an inflection point with a lot of markets. I think the war has emphasized that. Everything I've talked about tonight, I'm pretty happy with the context which I delivered to you tonight, because this is stuff I was thinking about in my frustration last night when I was writing the Substack. After not having internet yesterday, this is how it all plays out. Okay. All right, let's see what you guys got. Give me just a second to look through some of these. Yeah, iron trade, exactly, 172, and the market goes up $4 since he announced that. That was my point earlier. Anytime those guys are doing that, it's about 2 weeks of production he released, roughly. Current is around 14 million barrels per day in the U.S., so he let out a couple weeks. And I said it's not how much is out there, it's the transferring, it's the moving. There's a lot of logistic issues that exist, and you got everybody afraid. So the Lloyd's of London, everybody wants more money for insurance, everything's costly, the cost of carry is going up, there's a whole lot of other stuff going on. And I wish it was that easy. Oh, here's more oil, price goes down. Not happening. And I did not cover crude, did I? In my, was having way too much fun. So I'm going to go back live for just a second. But thanks for saying that, because I realized I didn't cover that. I hate being out of sequence like this. But here's, let's bring this back up. So here's crude daily. This is tonight's session. It rallied right into the close. And now since we're up $4 since they announced the IEA last night, Trump today, no one cares. This is because the crude guys are smarter than the average player out there. The commodity, especially crude. And like I said, I was fortunate enough, I worked with and oversaw and managed a crude hedge desk, and hung around some pretty smart guys. Yeah, that was 30 years ago, but crude guys are crude guys. They're commodity guys. Look at it. Look at this. I've been talking about this. We will see 105 plus on crude. I don't care what they do, because this market is reflecting the reality of what's going in that market, which is these disruption, the cost of carry, everything has multiplied here. So it's not just how much crude, and that's not what's there's a premium in this because of the cost of carry, insurance, shipping, everything. Everybody's like, okay, we'll get it there for you, but we're taking a lot of risk. You're going to have to pay us X. Yeah, I know it was Y last week, but it's X today. So the cost of carry is one of the biggest effects. I was talking with an old buddy of mine earlier today. So anyway, I'm glad I remembered to do that. Let's go back up. Let me look at some other questions. Yeah, they did. I think somebody's saying, except for the fact that they claim they did destroy and obliterate nuclear capabilities, but that doesn't mean they hadn't already enhanced stuff. That doesn't mean that. Yeah, okay. Yeah, I know what channel you watch, but yeah, that's what I think has happened, is that they had enriched enough for a nuclear bomb. And I do believe those things are pretty much are done. Let's see. Okay, here. Yeah, I would. Let's try to do Marty. If you're around tomorrow, remind me to go through UNG and some of those others. That would be. We need to look at those instead of just focusing on crude. So that's great. I'll try to remember. But if you're around, throw that up. I try not to look at the chat line because it disrupts my flow, and it's better if I don't. Yeah, we get the second Friday the 13th back to back on Friday. That's interesting. Yeah, Tony. I would agree. Amazing how delusional the West is. Okay, David, I would, yeah, that's interesting. $10 a gallon. $10 Aussie, right? So that's only worth what, 15 cents a dollar. I'm sorry, I'm being rude. That was one of the best things. That was one of the worst things when I lived in Australia. I to take money down there, it was Australian dollar was $1.15 to the dollar, so it was a premium. And the company I worked with was going down to work with was big bullion dealers, and we were setting up futures operations out of Melbourne. And actually out of Adelaide is where our headquarters was. So it was, so what I did was I bought sovereigns, and they were premium about 15%. So I was able to bring U.S. dollars in and sell my sovereigns down there and wipe out the 15 cents premium. So it was a pretty good deal. Yeah, I don't know if you folks saw that somebody Switzerland just changed something in their constitution to make sure that paper money would not go away. They may be the only smart ones out there again. Yeah, so Natalia, disruption of oil and gas, it could affect a lot of things. That's what we don't know, and we'll have to see if we can come up with some answers on what the effects of this disruption of everything coming energy and how it's going to be. I absolutely love the first season and second season of Landman. Billy Bob, you gotta love that guy. Yeah, I don't think the stock market's over, Tony. Won't a discount? I think I think the longer term trend's in place. I just think we may get into a short term regime with even, it just, for me, that regime is dominated by the percent bullish and what type of, uh, what kind of things we get out of that. So we'll be able to do what we just watched, which the short term database deteriorate, and then now we're seeing the effects starting to come into the intermediate, and we'll see how far that goes, what we're going to get. Yeah, so the Straits of Hormuz, I think that could be straightened out. That would not be that hard if they're. So I've been around a long time, iron trader. I remember what they did in 1984. It was pretty nasty, but now to find those mines and things that they're doing, that's child's play in this day and age, and cleaning that up. Not that it's more of a nuisance than anything else. Um, Yeah, I don't know anything about Brazil. Can't comment on that. Somebody wants to know if market crushes tomorrow. What do you guys think the bottom, or price wise, or do you think Friday? Listen, this cycle is going to run months. We're still in an upward bias mode, so there's still some things there. Yeah. I'm just looking through a few more things. We'll see. And then I'll come up with some kind of end of story. Yeah, I thought that when I saw that story on Switzerland, Switzerland is basically the Jeffersonian U.S. That's how the original, that's how the U.S. was supposed to look like. In Switzerland, um, the states operate almost as their own governments. That's how it was supposed to be. The state's power in the U.S. Constitution was was supposed to have a lot of bigger input. It's been overridden. There's a lot of things that have gradually just kind of moved out of, changed without changing, if you know what I mean. Yeah, so I see somebody, let's see here, been trading for 2.5 decades. That's good. 17. Ever been in any professional environments or just in front of your screen? Depends on where you learn. I was very fortunate because I grew up and it was my day job, and I traded on trading floors. I worked in big institutional desk. I've handled some big money, and it's where I always wanted to work was I wanted to work on the Fed funds desk in New York Fed. I always wanted that job. I'm trying to remember somebody, big analyst, that I don't think it was Yardini, it was somebody else, but I always wanted to do that. Yeah, I bet that's true. Yeah, I guess it's maybe good. Somebody said they sold all their stocks yesterday. I can tell you, I went to get a haircut several months ago, and my office is in the same complex of the lady that cuts my hair, and she told me I came in. This was last fall, right? And she goes, I finally bought Bitcoin. It was literally 120. And I went, oh God. No, you didn't. She's a really nice lady. I was just like, no, tell me you did not do that. So anyway, the old hairdresser story. Okay, folks, I guess that'll do it. Got an hour and 15 minutes. Appreciate everybody hanging out. I got lots of good coming for you folks. Keep hanging around. Tell your friends. Let's get the viewers back up to 1,000 live and get videos pushing 10, 15,000 again. I think you're gonna like where I'm going. It's for me, it's pretty exciting. It has everything to do with the tech stack that I'm getting ready to. Some of it's being redone, some of it's brand new, and I'm just excited about it. So you guys always do that. You start throwing questions out at the end. So, okay, folks. Yeah, I'm working on expanding my brand as well. You guys will find out about that. I've got people coming wanting to sponsor me and some things, and they're good sponsors, I think. We'll see what I work out. So I really want, I'm retooling from where I once was too. So this is, for me, is kind of the next run, because I want you folks to have access to a lot of these tools that I'm building long after I'm gone. And I understand mortality, especially after losing my wife last year. So you start to look at life differently as it comes at you as you get older. So it's interesting. I still love this stuff. I still love you guys. So subscribe, hit the bell, and we'll see you tomorrow, same time, as long as I have internet. All right, folks. Have a great evening.
Trying to ask, I think so. I came over to talk to